Welcome to another day in the Matrix. Waters above crypto. We're getting a nice little recovery in the market today after yesterday's sell-off, pretty much undoing the last 3 bearish trading days. For those of you who joined my live stream yesterday, I told everyone that this dip that we were getting was great. I wasn't worried at all. And here we are today seeing Bitcoin put on a 10% gain. So I'll say it again. Any big sell-offs in this market, I'll be buying. To me, it's just another buying opportunity in the matrix, not financial advice. So today we're going to be getting into the Bitcoin and XRP charts, go over see how I see this market playing out over the remainder of this week, moving into next week. And if you're new here, we do cryptocurrency technical analysis and combine it with the esoteric science of Gematria, Numerology, and Astrology to understand these markets. If you haven't already subscribed and you like what we're doing here, feel free to subscribe. Give this video a like and share this channel with other conscious people to help grow this community. We're almost at 10,000 subscribers. I believe we'll make that happen before the end of next week. So please share this. And let's try to get this video up to 500 likes. Appreciate you guys. And for those of you who want to learn how to do technical analysis and combine it with Gematria, you can join my Mastermind course. There's a promo code in the pinned comment. You can qualify for that promo code discount by becoming a Patreon supporter of the Mastermind community membership. Link to my Patreon is in the description. And to get in contact with me for access to the course, my email is in the description box as well. And with that being said, let's take the red pill. So, first things first, this market is fearful as fuck. Wow, it's amazing to see, but again, here we are, putting on a big green gain across the board, and it's after this extreme fear has been injected into this market. Now, who has this fear? It's the retail investor. Sweaty palms, lettuce hands. Let's get into the charts. So, a couple things that are technical that I think we could be looking into is this 2-day chart. So we're on the 2-day for Bitcoin, and the closure of this 2-day candle will be tonight. So the 2-day closure will be happening in a couple hours. Now, this green moving average right here is the 200 EMA exponential moving average, and you can see that's playing a very nice support. Now, basically, just to keep this short and sweet, if we get a 2-day closure below this green line right here, below the 200 exponential, I suspect we'll come down to around this simple moving average. This is the 200 simple, and it's around 26,500. Now, if we close below this, I believe the bull run is over for everything. So in my condition, I have yet to see a time where we get closures on the 2-day below this moving average and we maintain a bull market. Now, what we can see is a closure below this and then a quick exuberant buyback, which gets rejected by this white line, which is the 55 exponential on the 2-day chart. Sorry, this is the 55 simple, the 55 SMA. We get rejected off of this, and then that's the end of a bull run. So let's go back in the past and just quickly analyze what I'm talking about. So here, we actually came down right here to the green, the light green moving average, which is the exponential 200, and then you could see we pumped up into the white moving average, and that was the end of the show. We came down, had this attempt at a double bottom, and then basically when these two moving averages crossed, this light green with this dark green, this is the 200 exponential and the 200 simple moving average on the daily, we entered a noticeable bear market. Now that should have been noticeable also because the price was pulled back, quite substantially, and it was failing these highs, these rallies to the upside. Now, we are looking to be playing along this line as we currently look at our chart. You could see we're playing along this line. So this is a very crucial line in the sand moment for Bitcoin. Now let me show you something else from the previous bull run. You could see right here, we actually came below this light green moving average, came all the way down to the 200 simple, and then moved up pretty nicely and still entered a bear market. Now, this would be still a pretty substantial move off the top, about 45% off of the blow off. Okay? Now, this move right here, you see how it was quick? It was just one candle, then a recovery, and then it continued. That would be kind of how I would see this going as well in the event that this condition was met. So again, I'm using technical analysis. I'm not using my opinion here. We're going back and looking at the chart. Please know that. So another thing, I've been comparing this current bull run and this current stage of the bull run to the 2013 bull run. And this is very simple because you see right here in the middle of April, we have our all-time high, and then we have a massive sell-off, and then we basically have this really long, let me put it in log scale for you guys. We have this long range between April all the way up to October, and then we get the blow off top moving into December. So this is kind of how I feel this bull run is going to repeat. We're basically going to have an arduous trading range that's sideways and boring to get the retail investor out of here. With this violent dip in the middle, it's still in the cards. That's why I've been bringing up this idea behind July and how there's a potential for another dip in July. And we'll get into that later. So what we've been seeing recently is this bearish energy moving into the solar eclipse. Now, we had this sort of, this idea that we were going to get bullish energy moving into the new moon, but because the new moon is the solar eclipse, that's what's causing this energy to be chaotic, very uncertain. This kind of like when you want to go left, but it pulls you to the right sort of thing. And we've shown this using this moon cycles indicator. So we have this arc here. We have this moon phases indicator. Let me turn off the moving averages so you get a clearer picture. And you can see basically, we have two important things going on. We have every time there's a new moon, we're around bullish energy. And every time there's a full moon, we're around bearish energy. Then after full moons, we move bullish. Okay? And it happens time and time again. It's been happening all throughout this curve. Now, I've also said that this will happen around this time. But it's amazing how we got this really sharp pullback yesterday and then instant bullish momentum. Now, if you look back here, we actually hit the curve of this top 4 days, 5 days before the new moon. Same thing here. We have the new moon, and look at this, 4 or 5 days after we get that top. Okay, so this is still in the cards where we could actually hit this curve and come into the 44,000 level, a full 4 or 5 trading days after the new moon. It's just to give you an idea of the overall energy. It's impossible to know the exact day that it'll hit a top before pulling back. It's literally impossible. Nobody's able to tell you that. They're able to tell you price targets, but the exact day, it's really hard. So the fact that we got this pullback, again, it's showing me that this lunar eclipse, or the solar eclipse, excuse me, is more of a energy reset. So I went over this in my Patreon and in one of my Patreon posts yesterday for the Mastermind community membership. Those people, I was letting them know that, hey, this solar eclipse, these back-to-back eclipses where we had the lunar followed by the solar, this is kind of like an energy reset. It's basically telling you that, like, hey, we probably are going to have chaos in between this span. And that's exactly what we've seen. We've seen really scary price action. Fear and greed index is at pretty much an all-time low, consecutive day lows. We're probably going to hit the single digits, potentially. It's even in the cards. So with that being said, people need to understand that sentiment in this space has been completely drained. Even Bitcoin as a whole is losing its popularity in Google search. Crypto is becoming a scam again, according to everyone's favorite previous president. I say that as a joke, of course. But this is the thing, right? It's like once everything is looking good, everyone's happy, everyone thinks they're a millionaire, and then we get these massive sell-offs, and it basically resets the sentiment of the market. It's designed that way to get all the people who aren't a seasoned investor, who don't have a strategic investment thesis, to essentially be scared. And then after you're scared, they get you bored. And that combination right there is a potent, powerful combination. And this is why I'm telling everyone, all these dips that we're getting in Bitcoin below 32,000, I've bought every single one of them. I don't see that being a bad idea. Now, some people might be conflicted with that. They might say, oh, that's too expensive. It's going to go down to 25. It's going to go down to 23. Great, great. You know how quickly it could move from 23 up to 40? Let's look back here. Right here. When we moved literally from 23,000 to 42,000 in less than 2 weeks. Do you think these dips are going to be there forever? Fuck no. These are going to be bought up so quick by institutional investors. The exchanges won't even be working that day when those dips come. It's done like that time and time again, and it's to basically shake out retail. Now, am I saying we'll pull back to those prices? No. But I gave you the TA showing you that we could absolutely come down to 27. Another thing that's important to look at would be this 55 on the weekly. A lot of people, they use the 50 moving average. Let me remove the moon. Remove the moon. No, don't remove the moon. Remove the moon indicator. So let me hide these drawings. Okay, you see, I like to use the 55 simple moving average. It's just kind of the way that I like to play this game. A lot of people use the 50. I think the 50 is sitting somewhere around this 28 level. Doesn't really make big difference. So this 50 typically at the end of a bull run will come down to the 50 and then bounce sometimes 100% to the upside before the bull run's over. So that would, watch, I'll show you what I'm talking about. So you see here, this is the end of the bull run. And this we touch down to the 50 moving average right here around February. Then we pumped up. All the way to this wick right here is literally 100% exactly. And that was done over the next 14 days after that violent dip. So even if we do pull back very quickly down to this 55, you could still anticipate a, let's just say this happened for some weird reason like next week or something. This is still capable, guys, of going all the way back up to 55K, having a double top, and ending the bull run. Now imagine this happened for Bitcoin. What this would cause is an alt season. So this is totally possible. Everything's possible in this matrix. Am I saying this is going to happen? No. I think this bull run is going to end when it always ends, which is around the winter time, around December for Bitcoin and around January for most of the altcoins, as late as February for every altcoin. That's including the shit coins. So, a little bit of a tangent. I do want to look over this real quick though, this 4-hour chart, and show you guys a potential Wyckoff schematic. Again, it's actually pretty funny how popular Wyckoff has gotten over the last couple, like maybe the last month. And for those of you that have been following my channel for a while now, you can go back to my first video, which was sometime in October. And I was using Wyckoff. So it's really crazy to see how popular Wyckoff has gotten. So anyways, this is a cool chart that I drew out. As for the phases and the exact idea of the phases, that's really kind of unimportant. But the idea of this potentially being the spring. Now, this is an accumulation schematic, which is a short-term. I'm putting this in the short term. You could see it's on the 1-hour chart. Now, this is a pretty classic move, and I could show you guys basically charted out. So right here, you have the vast, very quick sell-off. This dip is kind of a liquidity error. Basically, all the exchanges were like broken that day, and the only people that were making moves were the same whales that sold off. This is what I would call the selling climax. This is what I would call the automatic rally, supply test, and then basically this failed top below the automatic rally confirms this as the automatic rally, and then you have a spring. Now the spring, you basically come back to the area that you were having trouble with before. So this is why I consider it a spring, because you see this flat trading, and now we're having resistance there. We don't just want to keep busting up. So what happens typically is we could move up a little higher to around this level, 39, or even as high as right here, and then pull back again back to this previous area. And then after that, it's called the test, and then you move up into the SOS. And SOS is confirmed by getting above the previous automatic rally. Now, until we break 41,000, we haven't seen a higher high in the structure, which means we can't call this a reversal just yet. But technically, we still have higher lows, okay? Now, this double bottom scenario thing is indicative of a spring, but sometimes springs do actually go lower. Now, this is a short-term Wyckoff. This isn't me doing a macro Wyckoff. If I was doing a macro Wyckoff, I would put it in the weekly chart, and I would say this looks like a reaccumulation after decline, and that's a totally different story. I'm actually going to be doing a TA lesson using Wyckoff for the macro for the Patreon supporters of the Mastermind community sometime this week. I'll be making that video lesson, and I actually will be designing all of my own Wyckoff charts with the help of another supporter of mine who helped me out, and I'm going to be making all of my own like waters above Wyckoff schematics. So that'll be another good tool for everyone in the Patreon as well. Now, I'm going to move on to XRP because there's some juicy things going on over there. Juicy and boring. My two favorite. Okay, so we have a weekly chart with XRP, and what we're going to be looking into really quickly is how this 21 exponential moving average is holding up very nicely. So even though we did pull back below it, we're seeing that support. So I suspect if we can hold this 21, which is this orange moving average right here, that would be a sign of obviously sideways, but still holding strong. Now, the weekly close is in like 4 days or something, so we still have more time. But what I suspect is a condition for bullish momentum. Let me put this in a linear chart. So for bullish price action, we need to get a weekly close above this 236. So a weekly close above 96 cents would also indicate a weekly close above the 13 EMA, which would be basically bring us to our next level. Now, we do have some problems though, okay? So some of the problems here is this cross. Now we have the 2-day closure coming tonight, and you could see the 2-day close with the 8 simple and the 55 simple are crossing bearish. Now, this is not good, and it tells me, again, it adds to my confidence that we're going to have a sideways, boring, and slightly down market for the next couple months on XRP. So this cross right here is not good, but even though we're getting this cross, we can still have an automatic rally or a push into a bull trap. Let me show you my conditions of this bull trap. So for one, let's go back to the 2-day with these 3 moving averages. You see the problem here? These 3 key moving averages are all sitting around $1.10. So what this tells me is it's going to take a lot of liquidity injected into this market for XRP to be able to break above 110. Now, if it could break above 110 though, the first target I see it moving to would be naturally around this level right here, which would be the 382 fib. And then after the 382, I think it's just going to get stopped out by this 55 SMA on the daily. If it could break above that, absolutely I see a bull trap. So the bull trap would be moving into this golden pocket ratio and this golden pocket area, sorry, the 786 and 618. And that would be a sign for me to be de-risking my position, because these types of exuberant moves like that, those bear traps are really ugly. And that's what the bull trap would be really ugly. And that's what I said before about Bitcoin. When Bitcoin really enters a bear market, it'll sell all the way off down to like this green moving average, and then it'll pop all the way up and then get rejected. And that rejection could come up really high. Like it almost looks like the whole market has recovered, but then the bull run actually finishes. So again, I don't see the bull run being over, but I am giving you the analysis. I am letting you know what is possible. So one other thing I want to consider, though, is this dollar index combined with the US 10-year yield, and I'm going to finish off this video. So we're getting a rejection on the 10-year, and where it's getting support is the 382 fib, and then we also got this bearish cross on the daily. Now, why does this matter? Who the fuck cares about bonds? Well, I care about bonds because if the bonds keep hiking to the upside, the market is going to start to lose. It's going to have a lot of pressure on it. So the fact that we're seeing the bonds move to the downside, I suspect the natural area of a support would be around this trend line. This dotted trend line, as you can see, has played a very nice support all the way up until the breakout. And now it looks like we're sort of blowing off down to the back to this trend line. And another thing is this 200 exponential. It's perfectly on this trend line, so that also makes sense to me. This will most likely move back to around 130 to 133. Then the dollar losing strength on this red trend line, breaking below 89 on a weekly would be textbook. And this market's just going to keep moving to the upside. Now, I think for the most part, this market needs a breather. So it's good that we're kind of sideways and boring and bloody and scary and all of those things to shake out, weak hands. But the stock market is pretty much at all-time high still. Like you see this NASDAQ recovery, it looks like a really fucked up head and shoulder. This looks like a potential head and shoulders, so that's something to look out for. Yeah, the S&P 500 is pretty much at that double top area, so it could, it could pull back into the 55, and then we're seeing right here, it's definitely like holding support above at this 34,000 point level for the Dow Jones. So this isn't like, this is not territory to be like panicking and freaking out, but there is signs that there could be something to come in July. There could be a very quick, rapid sell-off. Maybe something happens with the vaccines, or sorry, I shouldn't have said that. Maybe something happens with the jab, then something happens with, whatever. This is how they do it. They just have contrived, pre-selected dates to coordinate dumps, and this market has been that way since day one. And with that being said, I think that we're just going to have to wait this next week out. I don't see any huge dips coming, at least until the end of this month near options expiry. Options expiry is not even that bad this month. Like I looked at the put call ratio and I wasn't seeing anything out of the ordinary. There are some 26,000 for Bitcoin. That is pretty alarming. But again, it adds up right with what I was saying in the beginning of this video. So today was a very technical video. I'm sorry if it was too technical for some. Again, I have a mastermind course where I go over and teach everyone all of this information that I went over today. Very good time to be considering getting educated in this market, because if this market's going to move sideways and down, that's the buying opportunity. That's the time to be educated, to make moves in this market and responsible moves in this market. Back in April, that was very gambler-like market. That was a very risky time to be entering positions, and a lot of people learned their lessons. So also the Patreon is live. You could go to patreon.com/watersabove, and you could join the mastermind community to unlock the discount on the mastermind course. And also I'll be doing my red pill episode this week, covering a bunch of altcoins and going over a little bit more on exit strategy in the event that we have a bullish run up into that potential bull flag scenario I've been talking about. And I hope all of you guys enjoy the rest of your day in this matrix. Much love.